Deep breath, everybody. We are about to hammer the management exam paper. So today we want to look at the BPP Mock 1 exam on management accounting. Right, BPP Mock 1 exam. So you find this paper in the revision kit. You find this paper in the BPP revision kit. Right, so guys, let's push boundaries. So we're going to start with number 1. So guys, what you have to understand is on management accounting, you must know your formulas. You must know your formulas because most of the formulas, they won't be given in the exam. And you must also be able to do the backward working when you are required to do so. So you must know the formulas, you must know how to do the normal working and the backward working, and you must also know the theory because in the exam it will be 50-50. 50% workings, 50% theory. Right, anyway, let's get into the topics, let's get into the questions. We have a bigger fish to fry. Number 1, a manufacturing company benchmarks the performance of its accounts receivables department with that of the leading credit company. What type of benchmarking is the company using? Now, on number 1, looking at this, they are talking about benchmarking. So benchmarking, guys, it is under performance measurement where we want to measure the performance of the company. We want to measure the performance of the division, the performance of different departments. So we want to measure the performance of the company as a whole. So now on benchmarking, guys, on what do we mean we say we are benchmarking? Benchmarking, guys, we are doing a comparison, you understand? So this is a comparison that you'll be doing. So but what you have to understand, we do have 4 types of benchmarking. Number 1, there is internal. Number 2, there is functional. Number 3, there is competitive. Number 4, there is strategic. Right. So before I answer the question, I want you to understand the types. Internal benchmarking, this is when you compare different departments within the same organization. So guys, benchmarking, why do we do benchmarking? The aim is for us to improve our performance, you understand? So the aim is to improve the performance. So it happens even maybe it can be college where students, they will be comparing their marks when they write the exam. The reason of doing that, the idea is for people to improve. You understand? When we look at an organization, the reason why we would want to compare, maybe it's a manufacturing company. This employee A manufactured 10 units, employee B manufactured 15 units. Maybe we are looking at the departments. What is their performance now? So we want to understand the performance of the departments. There are so many factors that you can consider whether this department is better than this, performed better than another department. Maybe you can talk about the ROS, return on capital employed, you can measure using that. There are so many factors that you can consider. So on internal benchmarking, this is when you do a comparison of different departments within an organization. But if it's functional, this is when you look at your department as an organization. But now you want to compare with the best external practitioners. So the reason why you want to compare with the people who are leading in the market, it's not because you want to beat them. So there might be people that you know they lead. You understand? You can't beat them, but the idea is you want to see where you are as an organization to improve your performance. Like you don't want a big gap. You understand? It will be a functional when you compare with the best external practitioners, people with experience. Competitive benchmarking, this is when you do a comparison, when you compare with your competitors, you understand? So you can look at competitors, you do a comparison of different companies. It depends with the companies that you know that these companies are competitors, you understand? I can give you an example of that. So I can give you an example of, we can talk about, okay, if there's a Speak and Pay, you understand? These are competitors. So there are so many competitors that you need to understand. But on competitive, guys, there is what is called reverse engineering. Reverse engineering. Reverse engineering. Another example of competitors, we have we do have Samsung versus Huawei, you understand? So those are the competitors. What they can do is what they can do what is known as the reverse engineering, where we say you buy a competitor's product, you dismantle it in order to understand the components, you understand? So the reason of buying a competitor's product is not because you want to use it, but you want to understand like how they are doing it. Maybe you want to copy some of the things. So this will be a competition. So if they can ask you in the exam that reverse engineering is under which type of benchmarking. So as I said, reverse engineering, it will be competitive, you understand? Number 4, this is strategic benchmarking, where you compare with your competitors now at a strategic level. You are not just comparing everything, but you are now focusing on the main things, such as the profitability, such as the liquidity, you understand? Right, so those are the types of the benchmarking. So reading the question now, a manufacturing company benchmarks the performance of its accounts receivable department. Right now with that of the leading, so we have our accounts receivables department, the department which focuses on the customers, collecting the amounts, collecting our debts from the customers now. So, but we are comparing with that of the leading company. For example, maybe we've been collecting our debts maybe after 60 days. What about those that are leading in the industry? Maybe they are collecting after 30 days. So guys, if we are collecting after 60 days, but those that are leading, they are collecting after 30 days. So guys, are you seeing that payments are being delayed by the customers? So we want to find the ways that we can do to improve the performance, to improve so that we have the cash flows, to understand, because we need cash in order to survive. So by looking at this question now, talking about the benchmarking, this is what functional benchmarking, because you are comparing with the leaders, you are comparing with the best external practitioners, so the answer will be functional. Number 2 now, they're saying which of the following best describes target costing. Target costing, now what do we mean on target costing? This is when you set a target, guys. The word target costing, there is a target that you can set as an organization that you say we do not want to exceed this cost. So target costing, it is under alternative costing principles. So we don't talk much on target costing when you're doing MA. We don't do the calculations. You do the calculations when you're doing the advanced MA, when you're doing PM. But now on MA, guys, I want you to understand this. I want you to understand this on the target costing. What do most people do when they sell their products? Normally what people do is, there is what is known as the traditional method. So versus the target costing. Right, the traditional 1, 2, 3, when you want to sell your product, normally you want to know the cost that you have incurred, right? That's the first stage. After the cost, you say what? For example, let's say for argument's sake, if the product costs you $10, obviously you can't sell at $10. You want to sell at a higher price. So for us to be able to know the selling price, we need to know the markup that you're going to add. You understand? So you add the markup. What's the markup? Markup is the profit. Let's say you need to gain $5. So if you want to gain the $5, if you make a sale per unit, what will be the selling price? Obviously, you will sell your product at $15. So traditional method, yes, is fine in the sense that there is no way you will make a loss, because even if the cost is high, even if the cost is $15, you will charge a price which is above the cost. But the disadvantage of this method is it does not encourage cost saving. You will not be able to save the cost, because you know even if the cost is high, you don't care, because you set a price that is above the cost. But there is a challenge on that, because you might end up charging the price that will be above that of your rivals, that will be above your competitors, right? So what do we do now? So that's why now we say target costing is better. So you have to set a target cost so that you won't exceed that cost. So because if you exceed that cost, what will happen to the profit? The profit will deteriorate. So step number 1 now, remember, we want to make more sales. We want to gain market share. So therefore, let's first by considering the price that we are going to sell our product at. So now the selling price that we are talking about, that will be the market price. look at how competitors are charging. So now, for example, let's say the selling price is $15 in the market. So we'll also charge at 15 so that we'll be able to sell many units. Then number two, what will we do? We need to know the required the profit margin. What is our profit margin? The margin that we want. For example, let's say we want a profit of $5. Then the last step now, you then now know that for us to, yes, we are selling at 15, and for us to gain a profit of 5, our cost should be what? What will be our cost? The target cost should be $10, you understand? So that will be the target cost. So those are the steps that you follow under what? Target costing. So, but let's just answer the question now. Which of the following best describes target costing? A, they are saying, okay, the first statement, I'll say, the first one, let it be A, the second one, let it be B, the third one, let it be C, the last one, let it be D. So on A, they are saying setting a cost by subtracting a desired profit margin from a competitive selling price. So A is the correct answer. Moving on to number 3, I'm looking at the process costing. Process costing, they are talking about the normal loss and the abnormal gains. So if you look at this now, we have process F and we have process G. So they are saying process F, is it abnormal loss or is abnormal gain? So guys, there is an easy way of doing this. Process F, allow me to open the T account, right? This is my debit, this is my credit. Process G, this is my debit, this is my credit. So there can be a column for the units and for the value. But looking at this question, we don't have the values. So I'm going to put the units only, guys. Right. Now looking at this. Now on process F, they are saying the input. So we do have liters on the questions. On the question, liters. All right. What is our input on process F? Now on process F, I'm seeing that the input is 65,000. What about the output? The output, it is 59. That's what 50 what? That's 58,900. But what you have to understand is they can ask you a theory question on process costing. They will say we want to manufacture something. Maybe it's a liquid. So, for example, the manufacture of liquid soap is under which costing? It's under process costing. When they talk about the liquids, for example, oil refinery, it can be paint. This is all under process costing, right? So now looking at this is our input. So when we do with that, just know that there will be expected losses. The expected losses, that's a normal loss. So let me record the normal loss. This was our output. What about the loss, the expected loss from the processor? Expected loss, on the question they are saying, for F we are expecting a loss of 8% of the input. So what's 8% of input? 8% of the 65, that's the 5.2. So you balance off your account to see if it is balancing. Right, you compare now 58,900 plus that amount, those liters, which is greater, the debit side is greater. So 65 here, 65 here. As you can see now, I'm seeing, okay, you compare with 65,900 here. So if I balance off, there is a shortfall of 900 on this side. So on this side, guys, we have a normal loss. So guys, this is an abnormal loss. If the shortfall was on the debit side, that was going to be abnormal gain. So, but the shortfall is on the credit side, that makes it an abnormal loss. Maybe someone would want to understand, but guys, this is it for F with an abnormal loss. You now have your answer. Someone would want a different explanation. What you have to understand is, yes, you have your input. The expected loss was what? The expected loss was 5,200, right? Understand this. Expected loss, it was 5.2. What about the actual loss that was made? Actual loss, we say input less what? The output, right? So the actual loss that you made, we had an input of 65,000. This was our output. So if you say 65 less 58,900, so I'm seeing the actual loss that we made is 6.1. Actually, the loss was greater. So normally this was expected, but actually we made a loss of 6.1. So the actual loss was more. So there is an abnormal loss, which is our difference. So if you compare the two, you get 900. You understand? This is another way of getting it. Right, so for process G, I think you now know how to do it. So guys, I won't explain much. I've explained on process F. So for G there, input I'm seeing 37,500. Output on the question, 35,700. The normal loss, they said what? 5% of the inputs. Yes, 875. Balance off. Which one is greater there? This is 35,575. Sorry, 37,575. For a turn off, this I'm seeing 75. So this side is abnormal gain. So for G we have an abnormal gain. For F we have an abnormal loss. The next question now, number 4, they want you to calculate the profit under the marginal costing. So guys, under the marginal costing, what you do a reconciliation statement, right? You do a reconciliation statement. Now, a reconciliation statement, guys, this is what we do. Why am I talking about the reconciliation statement? Because I'm seeing the profit under absorption costing. So this is what you do, guys. MC profit, we compare it here. MC for marginal costing profit, differences in profits. This is what I do. Opening inventory units versus closing inventory units. You multiply by fixed OAR per unit. You get your absorption costing profit. Right. So guys, the difference between the marginal costing and the absorption costing is marginal costing focuses on variable cost only. The absorption costing focuses on both the fixed and the variable cost. Right, so there's a difference. So if I have the marginal profit, for me to have an absorption, the difference is on this what? Fixed cost, fixed OAR. Because fixed OAR is not, we don't use it on marginal costing. So now when I want to calculate the absorption, I'll then include it to get the absorption. You understand? So this is my formula. But on this question now, what am I given? I'm given the absorption profit of how much? Of 36. So I'm not calculating this, I'm calculating this. But I'm not going to change the formula. Let this formula be the same. What is the opening inventory? If you're not given the opening inventory, it will be nil. Opening inventory is the one that you get from the previous period. Do we have on the question? We don't have. So opening inventory is 0 here, less the closing inventory. But don't say if you are not given the closing, there's no closing. How many units were produced? On the question, how many units were manufactured? They manufactured 14,000 units and they sold 12,000, meaning the closing inventory units is 2,000. That is the balance that is remaining. 2,000 units. You multiply with the fixed OAR per unit. Looking at the question, I'm not giving the fixed OAR. So what do you do, guys? The fixed OAR per unit, how do you calculate it? You have your fixed cost is per unit. So you take your fixed cost, your budgeted fixed cost, you divide it with the number of units. Then you get the fixed cost per unit. But the tricky part on this cost question now, which fixed cost would you take? Since you are dividing with the units, you take the fixed production units so that they will be divided by the number of units. So on the question, I'm going to take the fixed production cost of 63,000 divided by the number of units on the question, normal level of activity of 14,000. So 63,000 divided by 14,000, your OAR, that will be 4.5 per unit. So I didn't include the fixed selling. We take the production divided by the production, like with like. So you multiply this 4.5 multiplied by 2,000, you get 9,000 here. So what is your marginal costing profit? Now, someone would want to add this back, someone would want to deduct this back. So this is the tricky part. We say that if the closing inventory units is greater than the opening inventory units, the absorption profit will be greater than the marginal profit. Right. I want you to understand this. Can you see this? If the closing inventory is greater than the opening. On this question, the closing is greater, meaning the absorption will also be greater than marginal. Since we are saying the absorption will be greater than the marginal, if this is greater than the opening. So on this question, it means marginal costing is less than the absorption. So for it to be less, there's a difference there of how much? If you deduct, so marginal will be 27,000. That will be your answer. Moving on to the next question, number 5. So guys, this is theory number 5. If you read the scenario very well, they are saying which of the following should not be allowed for when comparing the roles of the two organizations to assess the efficiency of their management. So if you're dealing with the competitors and you want to know on the roles, just know that the one that is not allowed for comparing the roles is the differences in workforce motivation. So guys, the factors that you consider when you want to compare roles, those are the 3 remaining. The A, you compare, you look at the price, the objective, and the geographical area. Yes. So number 6, under which sampling method does every member of the target population have an equal chance? Or number 6, when you say you have an equal chance of being selected, guys, if you are saying now, if you're operating your business, now if you're doing your business, guys, what you have to understand is in business you don't do you don't obtain population data, but what you can get is a sample. For example, you are introducing a new product into the market. It is not possible to get information from everyone in order to know whether they like the product or they don't like the product. So you just ask few people, you do a sample. So what you can do is maybe you can do a random sample. But guys, if you're saying I'm going to ask people randomly, it means everyone has an equal chance of being selected. So the word equal chance is key, makes it a random sampling. So B is the answer. A, stratified is not, because stratified talks about, though stratified was derived from the word strata, or strata means what? Groups or categories. So if they mention about the groups or about the categories, that will be stratified. If they mention on the systematic, it works whereby you involve dividing the population. Like on the systematic now, we consider what is known as the nth item. You pick the nth item, like you do if you made so many people, right? So guys, I can give an example. Let's say we do have students who have attended the conference. Maybe it is ACCA. They want to know, like, the students, that whether they which book do you like as a student. Do you like Kaplan or you prefer BPP? You understand? Yes, such a question can be asked. Maybe those that have attended is 10,000 people. So guys, do you want us to ask every student? So we can just pick an nth item. Nth item represents any number. So let's say 1,000th item. So I'm going to ask 1,000 into this. That will be 10 people. So I'll just ask the 10 people. 1,000, 2,000. 3,000, so you get it. So you end up asking 10 people instead of asking everyone. So that's systematic. Cluster, now cluster, this one is more biased, where it works where we say one subsection of the population is taken to be the representative of the whole population in question. So guys, it is biased. Why? Because you are being represented by what? By one person. So one person's judgment, guys, or opinion, it might affect everything, and it might not agree with what people would say if they were asked. Right, so number 7 now. Number 7, looking at this is a raw material purchase budget. But what you have to understand on budgeting, this is under the functional budgets. So guys, we do have the sales budget, production budget, raw material purchase budget. We also have other budgets, labor budget, overhead budget. But what you have to understand is the budgets that you prepare, such as the raw material budgets, you can't prepare those budgets without preparing the production budget first. So you start by preparing the production budget. You start by preparing the production budget. So guys, the production budget, what do we say on the production budget? So this is what you do, common sense. The inventory that you start with, that will be your opening inventory. When you manufacture units, it will increase. The goods that are in the warehouse in the stores department, they will increase. So you add the production units. What about if you sell the goods? Your units will decrease. That's why I'm deducting the sales, right? So you less the sales units. The balance that you get, that will be the closing inventory units. So guys, on the production budget, I'll be asked to calculate the production units. So you just make the production units the subject of the formula. You understand? So production units will be equal to, what about if this goes to this side? That will be the sales units plus the closing inventory units. Then this opening, if it goes on the right side, it will be the negative here, like this. So that's how you calculate the production units. Even if you don't remember this formula, go back to this equation, use common sense. Number of units that we had plus the number of units that we've produced, less those units sold, the balance that you get is closing. You calculate this as the balancing figure. So guys, let's read the question. A company manufactures and sells one product which requires 8 kg of raw materials. The budget data related to the next period are as follows. So I can't calculate the production, the raw material purchase budget without calculating the production units first. So on this question, I'm not given the production units. So let's calculate using this equation. So the sales units on the question, guys, I'm seeing 19,000 here, 19,000 plus the closing, I'm seeing the closing of 3,000 less the opening of what? Opening, this is 4,000. So you take the units, guys. So 19,000 plus 3,000 less the 4,000, you get 18,000 units, which is your production units. Then now you can prepare the raw material purchase budget. The raw material purchase budget. Now, the raw material purchase budget, guys, what do you do now? So they want the raw material purchase budget. Now you just say the material usage. This is the formula, but it has to be in kgs plus the closing inventory. So I'm copying this equation, changing the units to the kgs. You follow? So allow me to also add the closing less the opening, but now we are taking the kgs because we are doing the raw material purchase budget. The word budget means expected. So guys, material usage budget, how many units, how many kgs do you expect to use? That's what it means. Material usage, how many kgs do you expect to use? On the question they are saying, we are expecting, or the one product requires what? 8 kgs. This is 8 kgs per what? Per unit. So guys, on the production units, remember what I said. You can't prepare this budget without preparing the production first. So in the production, we have seen that we want to manufacture 18,000 units. So guys, if we want to manufacture 18,000 units, and the usage, we need 8 kg per unit. And if we manufacture 18,000 units here, how many kgs do we expect to use? You get it. So that will be 8 by 18,000, which will be 144. That will be 1444 kgs. Plus the closing inventory kgs. What's the closing of raw material? That's 53,000 kgs. Less the opening inventory, that's 50,000 kgs. So how many units do we expect to purchase? So 144, or how many units should we purchase? Less the 50,000, you get 147,000 kgs. They said the budget, you understand? That's it. That's the answer, guys. All right. If they say what will be the material purchase cost, you then take this, you multiply with the cost given. Let's move on to the next one. Now, on number 8, guys, I'm seeing the graphs. Up to a given level of activity in each period, the purchase price per unit of the raw material is constant. After that point, a lower price per unit applies to both. So there will be a lower price, guys, that will be applied. So we are on number 8. So number 8, this is theory. Right, number 8, this is theory. We are talking about what? The material. Guys, these are the units. This is the value. Right. If I buy, giving you an example, let's talk about these vital markers. If I buy one value, so let's say the cost is $2. How about if I buy 2, the cost will be $4, right? How about if I buy 3, the cost will be $6. So that's the what? That's the material, this is the variable cost. So it starts from 0. So obviously B is out because they are talking about the materials. But they are saying after that point, A lower price per unit applies to both further units purchased and also retrospectively to all units already purchased. So guys, if we are reducing the price, what are we saying? So now I know most people, let's say maybe if you purchase 3 units here, they will charge a lower price. If your graphic goes like this, it will the cost will be increasing. If it goes like this, the cost will be reducing. So most people would want to say this is the correct graph. That's what you want to say, guys. So, but what you have to understand is, if you draw like this, you are saying units after 3, for example, we are using 3 units as an example, that if you buy 3, they will charge you a lower price, right? So if you buy above, it will be lower. But the question said, retrospectively, including the units that you have purchased, they will reduce the price. So the price of $6, of 3 units is what? Is $6. So using this example, the first thing that you do, including the units that you have purchased, so you reduce the price of that product first, and also the units after this, they'll also be charged at a lower price. So this will be the graph, you follow, right? This will be the graph. So the correct answer, that will be what? That will be D is the correct answer. Graph D is the correct. Number 9, this is theory. Which 2 of the following are the benefits of budgeting? Some they prefer to use, some they use this mnemonic, they use Crumbet from the Kaplan text. I use this one. I call it PPMR. P for planning, coordinating, controlling, communicating, evaluating, motivation, and authorizing, right? So the benefits of budgeting, those are the benefits, or we say the benefits or the purpose of budgeting. So you just check your mnemonic, is it there? So it helps to coordinate. A is correct because there is coordinate there. If you make budgets, you'll be able to coordinate. It leads to goal concurrence. People will be able to work towards the same goal. Right, and what else am I seeing there? I'm seeing the word control on C here. There is the word control there, so they want to. So A and C is the correct answer. Number 10, the following statements led to the participation of junior management in setting budgets. What you have to understand, if you involve the junior management to make budgets, they will be motivated. But the disadvantage is it causes what we call budgetary slack. There will be a slack whereby they will overestimate the cost, or they will also underestimate the revenues. Yes. So now on this one, it increases their motivation. 2 is the correct answer. B is the correct answer. Number 11, they want you to calculate the ROI, the return on investment, guys. So when you calculate the return on investment, so what you have to understand is you are looking at the divisions within an organization. So that's why the formula talks about the controllable profit. So you will be a manager of a certain division. So we only consider the cost that you have control over. So we do not include the central cost or the head office cost because you don't have control over those costs. So as a manager, those type of costs, they will be incurred by the seniors or by the top management. So it will not be fair to include those costs. So we only consider things that you do have control over. So what is the formula for ROI now? Formula for ROI, we say the controllable profit divided by what? By the amount that has been invested, which is known as the capital employed. So capital employed, another name for capital employed, we say the net assets multiplied by 100. So you look at your question, do you have the capital employed? Yes, we have. So the denominator, we have it. We have the capital employed. What about the controllable profit? If you read the question, I'm not seeing the controllable profit. So what do you do now? You are given the residual income. This shows you that this is a backward working. Remember what I said when you started initially? I said that in the exam, you should know your formulas. Number 2, you should be able to do the backward working. So in this question, there is a residual income. Why am I given the RI? Why am I given the residual income, yet they want me to calculate the ROI? This shows that you have to do backward. Let's write the formula. Residual income is calculated as what? Controllable profit less percentage cost of capital. Percentage cost of capital, another name, is also imputed interest. You multiply with the capital employed here. Multiply with the capital employed. This is the formula, guys. Why am I given the residual income? This formula, it has the controllable profit. So are you saying that if I get this controllable profit, I'll be able to use it here to calculate the ROI? This is why I was given the residual income. Let's substitute. We have 36 here equal to controllable profit. Let this be my X. Let's open bracket, percentage cost of capital on the question, that's 12%. What about the capital employed or the net assets on the question? That's 200,000. Right, you solve your mathematics from left to right. So this is 36,000 equal to X less here. The first thing that you do, multiply what's in the brackets. So guys, I do not recommend shortcuts. So follow step by step, baby steps, you surely get there. Right, this is 24,000. Right, now how do you make X the subject of the formula? This goes to, and this is the way of doing that. The 24,000 goes to this side. So at the end, we will say 36,000 will be married to what? Will be married to 24,000. So this, if you add this, if you say 36 plus 24, that will be 60,000. So X here, common sense here, is 60,000. Right, now we now have the controllable profit, guys. So the controllable profit here, this is now 60,000, capital employed 200,000 multiplied by 100. Your answer will be what? If you do the number crunching exercise on your adding machine now, you get what? What do you get? You get 30%. That's number 11.